online shortly after the presentation. Let's get started. Hello, thank you again for principles. As I said before, I'm Romy Parzik, Manager Innovation at the Center for Financial Services Innovation, and I'm the lead for the Compass Principles Initiative and the lead author of the Compass Principles white paper. I'll be the webinar facilitator today. I'm looking forward to sharing important work with all of you. Thank the Ford Foundation and Omidyar Network for their support and thought leadership on this work. Let's get started by going through the agenda together so that you have an idea of what we'll cover today. We'll start with a brief overview of what I call the new reality for financial services, how changes in the marketplace and the regulatory landscape drove CFSI to embark on this work. Secondly, I'll cover the Compass Principles framework with you. Thirdly, I'll talk about our search for leaders through our Compass Commitment Program. This is one of the central ways in which we are working to bring the Compass Principles to life in the marketplace. Finally, I'll give you a sense for what's coming up for the Compass Principles work, and then we'll have the chance for you, the audience, to ask some questions. So let's begin with the new reality to explain why the Compass Principles are important. Last year, Gallup reported that 36% of Americans have very low or no confidence in U.S. banks. This is the highest percentage on record and up from 30% the year before. And it marked the consecutive year in which more Americans actually express little or no confidence in banks. Numbers that say they have a great deal or quite a lot of confidence. Obviously, the country's economic challenges have not positively influenced financial institutions' profiles in the minds of consumers. Of course, as demonstrated during the financial crisis, confidence is essential to having a well-functioning financial system. Additionally, financially underserved market is still enormous. The FDIC estimates that 1 in 4 households is unbanked or unbanked. This translates to 60 million people. Last year, CFSI released a study that showed these consumers spent $45 billion a year on interest and fees. These consumers that lack access to products and services that can help them manage their money today while building assets for the future. Product offerings are especially important for this population. New regulations will play a significant role in the next phase of the banking industry. This isn't simply about more regulation. It's about new, different approaches to regulation. The Consumer Financial Protection Bureau is focused on infusing transparency and fairness into the financial services marketplace through its three-pronged strategy of education, enforcement, and research. And the creation of the Bureau itself has caused all other regulatory agencies to take a fresh look at their own approach. The Bureau's mission is to ensure that consumers get the information they need to make the financial decisions they believe for themselves and for their families, and that prices are clear up front, that risks are visible, and that nothing is buried in fine print. We certainly need an agency that reviews financial provider practices from the point of view of the consumer, and that will be critical as financial institutions explore new business opportunities in the wake of the economic crisis. But regulation is only part of the equation. Regulation alone will not shape the future of financial services. This is a critical time for responsible and essential service providers to understand the need of and fairly serve hardworking American families. New regulations will define what the industry must do to keep consumers safe. But now is the time for financial services providers to challenge themselves to create a marketplace in which financial services are safe, profitable, and actively contribute to improve lives. To help the industry take a proactive role, CFSI created the Compass Principles in consultation with providers, consumer advocates, regulators, policymakers, and other experts. Through the creation process, we work closely with many financial services providers of all shapes and sizes that are genuinely working to make their products and services more affordable, convenient, and trustworthy for all consumers. The Compass Principles provide a roadmap to ensure that products are of a higher quality standard and benefit both the consumer and financial institution. The Compass Principles are intended to encourage providers to go beyond regulatory compliance and to engage in a race to the top rather than a race to the bottom. Now let's move into a brief tour of the Compass Principles framework. The framework has 6 core values. We use these values to drive the development of the principles themselves, and we believe these values must be shared by those who wish to improve the financial services marketplace. 1, profitability and scalability. The principles recognize that financial services must be profitable and scalable from a business standpoint. Profit shouldn't be a bad word. Business not profit, or financial sustainability through subsidy. Providers make a profit in order to offer consumers lasting, high-quality solutions. While this is clearly antithetical to the idea of companies profiting from harming consumers, the framework supports profitability through products that intentionally align consumer and provider success. These are the types of products that are most likely to be around for the long term and more likely to be scalable. In addition, achieving sufficient scale of quality offerings is critical to addressing widespread consumer financial needs. Number 2, deep customer knowledge. These principles must be implemented with a solid understanding of what consumers need and want from financial services, as well as how they engage with financial services. Low and moderate income consumers, for example, often conduct their financial transactions in real time and have little day-to-day fluctuations in their cash flow, unexpected expenses, or future planning. The importance of consumer knowledge cannot be overstated, in part because how consumers use a product or service is harmful. Number 3, safety. Critical and place requirement. Financial services should not make life more difficult for users. Features, fee structures, and underwriting practices should not reduce consumers' financial well-being. The companies are meant to support and build upon consumer protection laws and regulations. Sometimes, to inspire the industry to act before a mandate, Compass Principle recommendations may overlap with policy recommendations. As I said earlier, the Compass Principles are intended to encourage providers not only to comply with consumer protections, but to engage in a race to the top rather than a race to the bottom. Variation in choice. The goal of this initiative is not to lead consumers to the same products and services. There's simply too much inherent value in choice, diversity, and continued innovation. These principles are about guiding, enabling, and encouraging the right access for consumers and meeting their needs with new and creative solutions that help them achieve their financial goals. The principles acknowledge the many trade-offs that exist in designing products and services that will increase consumer financial prosperity. For example, financial providers have to strike an inherent balance between offering products that are simple versus incorporating robust features and functionality. Achieving the right balance is not easy. There's no single right way to meet consumer needs, and providers will create their own customer value equations for their products and services. Therefore, the principles allow for judgment on the part of individual customers and providers. Number 5, relationships. At the heart of the principles is a commitment to mutual success in the customer-provider relationship. A healthy financial relationship can exist only when both the customer and the provider act responsibly. In today's environment, many customers are increasingly estranged from their financial providers, and some financial providers are overly focused on monetizing segregated transactions and accounts. These principles promote a reversal of this dynamic. By reframing each customer interaction as a source of many future engagements and aligning company culture and incentives accordingly, providers can successfully and profitably offer, structure, and sell products and serve a positive customer relationship. Additionally, customers must take the initiative to be fiscally responsible in learning about, accessing, and using the high-quality products available to them. A positive customer experience can then lead to increased involvement in the institution. Participation. To inspire trust, this framework reflects an appreciation for the distinct valuable perspectives, consumer advocates, regulators, and policymakers. If these principles are to result in lasting positive change for consumers, everyone who can influence the marketplace must embrace and act upon them. That includes not only financial services providers, but also technology vendors and solution providers in the financial services supply chain, and nonprofits, government, retailers, and others. Each of these institutions will implement the principles differently, but each has a crucial role. We've covered the values. Let's move on to the 4 principles that are the basis of the framework. The first principle is embrace inclusion by responsibly expanding access. When this is done right, consumers, including those in committees, are creatively reached and well-served with a relevant suite of quality, affordable financial services that promote consumer choice and are provided in a safe, dignified, and convenient manner. For each principle in the framework, CFSI provides practices that align with the principle. We also offer examples of applying the principles to transaction, credit, and savings products. So to bring Embrace Inclusion to life a little bit, let me share one practice and one example. Applications for their best, most affordable to all consumers who qualify. As an example of applying Embrace Inclusion to a credit product, it would be expanding the underwriting process to safely incorporate positive data not captured credit reporting. The second principle is build trust by developing mutually beneficial products that deliver clear and consistent value. When this is done right, consumers can clearly understand and derive value without pitfalls or unwelcome uses from their financial products designed to align provider and consumer goals. Again, let me share one practice in providers who achieve this goal will educate consumers on the best and highest use of a product or service. An example of applying build trust to a transaction product is limiting the number of times a consumer can be charged the same fee within a given time frame before contacting the consumer to offer education, information, or alternative products that may be more appropriate. The third principle is promote success by driving positive consumer behavior through smart design and communication. When this is done right, consumers are empowered to make wise money choices via smart product design and guidance that is relevant to their specific concerns and financial situations, coincides in a timely fashion with key life events or decisions, and is immediately actionable. The practice I'll share on this one is that providers who achieve this goal will design products that incorporate defaults or nudges to increase the likelihood that consumers will make good choices. An example of applying Promote Success to a savings product is to incorporate default settings that nudge consumers toward automatic savings from paychecks or from linked transactional accounts. The fourth principle is create opportunity by providing options for upward mobility. When this is done right, consumers, I'm sorry, I'm having a little bit of technical difficulty. The slides don't seem to be advancing. Please bear with me for 1 minute. Okay, here we go. We're back on track. Okay, so the fourth principle is, okay, we are on the fourth principle, that's right, okay. The fourth principle is create opportunity by providing options for upward mobility. When this is done right, consumers have appropriate options that create opportunities for increased financial prosperity, and they are encouraged to pursue those opportunities. The practice I'd like to share with you on this one is that providers who achieve this goal will support customers in developing a comprehensive understanding of their entire financial picture through education, information, and other tools. An example of applying Create Opportunity to transaction products is providing a way for consumers to track spending in separate, tangible categories that are defined by the user. Hopefully, that provided a solid overview of the Compass Principles framework. If you haven't done so already, I'd strongly encourage you to read our white paper and review some of our quick reference guides, which are one-pagers available on the website about applying the principles to transaction, credit, and savings products. Now let's talk about the path to bringing these principles and practices to life in the marketplace. CFSI views the Compass Principles work as a journey. We started our journey with a concept phase where we worked internally and with close external partners to formulate the first draft of the framework and the white paper. Last year, we launched the feedback phase, where we went far beyond our close external partners to facilitate a series of cross-sector meetings to gather teams as comprehensive and effective as possible. Last month, we launched the final white paper and framework that came as a result of the feedback phase. And now we're looking for leaders to make Compass commitments. Why do we believe leaders are important? We believe that Compass commitments and companies that make these commitments will contribute to building a thriving financial services industry, will demonstrate how to put the Compass principles into action, will encourage emulation by other providers, and will beta test and provide proof points for the Compass principles. We are not looking for a broad sign-on campaign. We are looking to a targeted number of select companies that are willing to make meaningful commitments to the principles. What does this look like? Senior leadership at Compass commitment companies will publicly commit to a specific, measurable, high-impact initiative to demonstrate application and adoption of the Compass principles. Senior leaders will invest resources to successfully support the commitment. They will share progress, insights, and data through their own channels and CFSI's channels, including webinars, websites, social media, and the CFSI 2012 Underbanked Forum. They will provide a testing ground for the Compass Principles framework to evaluate what works and to help CFSI develop tools for industry-wide adoption. And finally, they will advise CFSI about the ideas in the Compass Principles document and the strategies for getting practitioners and others to adopt the principles. So let's take a closer look at two of the first companies to make Compass commitments. The first is Core Innovation Capital. Core Innovation Capital is a strategic partner of CFSI. It is a venture fund focused on investing in scalable financial technology companies that served unbanked and underbanked consumers. Core commits to using the 4 principles in its investment underwriting. It will add each principle to its investment summaries and investment memoranda and associate a description of how the investment prospect embodies or does not embody each principle. This data will factor into Core's determination of an investment fit. Core will also be integrating the Compass principles into its annual impact audit, a report that outlines an evaluation of each investment on a yearly basis. The report will include an analysis of each of the principles for each company. How are they being used, where they might be falling short, and how they could improve. Finally, Core will actively encourage its portfolio companies to consider making their own Compass commitments. In investment letters, Core will include a section regarding the principles, wherein management has the opportunity to express alignment with the principles and agrees to engage with CFSI to explore if and how that company can make an official commitment. Now let's talk about Plastique. Plastique is a leading independent provider of online banking and payment services. It has made a 3-pronged commitment. Number 1, easy information and services is critical to financial success, particularly for the financially underserved. As part of its Compass commitment, Plastique has launched a full-service mobile application, one of the only financial services applications that will have the exact same access to information and functionality as their online platform. The mobile application will also feature mobile push notifications that the users can set for specific events of importance to them: direct deposits received, checks cleared, cash loads completed, etc. This allows for customization that will help customers be successful. The second part of Plastique's commitment is that Plastiques do not have traditional forms of identification and therefore are sometimes unable to seamlessly sign up for accounts online. In these cases, users are processed midway through and asked to send additional verification via fax before they can start using the services. Therefore, Plastique will implement a new online system that will enable more consumers with non-traditional identification to successfully acquire services with additional information or getting kicked out of the queue. Not only does this provide a better experience for the consumer, Plastique will reduce both the risk of losing new customers and the cost of the manual sorting and filing of hard copy records. And number 3, consumers can only successfully use financial services if they understand them. In order to make sure their customers are getting all of the information they need about their services in the most efficient way, Plastique is making a number of enhancements to their customer service offerings, including implementing a system online where a consumer can engage in a text dialogue with a customer service agent, developing a new short collection of how-to animation videos that will demonstrate how to use both the basic and enhanced features of the service, and embedding real-time access to help in relevant locations, such as the ability to click on a fee within a billing statement to understand what it's for, why it's there, and how to avoid it in the future. So what's next for the Compass principles? What can you expect from CFSI over the next year? Well, coming soon, we have a Compass Guide to Prepaid. This guide will be released the first week in June at the Power of Prepaid conference in Washington, D.C. And this is a guide that specifically takes the high-level Compass Principles framework that I've just walked through with you, and it applies it very tangibly to general purpose reloadable prepaid card accounts. This is a guide that we worked on very closely with our Advisory Council on Prepaid, which is a group made out of 18 different companies and organizations that represent the whole value chain of a prepaid card, and includes consumer advocates. The folks that helped us on this are from the AARP Foundation, American Express Company, Bancorp Bank, Comerica Bank, Consumers Union, FIS Global, Green Dot Corporation, MasterCard Worldwide, Meta Bank and Meta Payment Systems, the National Consumer Law Center, National Urban League, NetSpend Corporation, Plastique, the Leadership Conference on Civil and Human Rights, TXVIA, Visa, Walmart, and Western Union. So you see we had some of the best thinkers at the table to really help us come up with this guide. So look forward to that coming soon. The next is new Compass commitments. So CFSI works closely with Core Innovation Capital and Plastique, and we worked with them through an application and negotiation process to come up with their commitments early in the process so that we could have examples to share with others. But we are really looking for a whole new set of Compass commitments in the next few months, and our next big announcement will be at our Underbank Conference in June in San Francisco, and you can learn more about that conference on our website. You should also expect additional Compass Principles resources and tools from us. These will be ways in which, similar to the Compass Guide to Prepaid, ways in which we're taking the high-level framework and helping companies apply them specifically to products or services. So look forward to that. Okay, so now it's time for questions. I will open up the question forum and see if anybody has any. Okay, great. Well, I don't see any questions in the chat view for me, so I thank you very much for your time today, and I encourage you to visit compassprinciples.com to learn more about the framework overall, to get specific one-page resources on how to apply the principles to track the savings and credit products, and also to learn more about how to prepare for a Compass Principles commitment. If that's something you're interested in, we have a readiness checklist and other one-pagers to help you prepare for the application process. Thank you very much.